Welcome back. You're watching our special series Outlook 2017. I've been in conversation with Krishna Kumar of Eastspring Investments. So what do you do as an investor now? I mean, you're a professional investor. You manage portfolios. You put cash to work. What do you do in a scenario like this?
The job is a tough job, right? I mean, making money in these kind of markets is going to be very difficult. But what we try and do is to sit away from consensus. And sitting away from consensus sometimes is a lonely trade. But that's where the money is to be made. And when I say that, we kind of look at names which are unfashionable, sectors which are reasonably beaten down, and it's not kind of populist to kind of go and buy these sectors. So we think about names which kind of are not in the what is called as momentum or in the fashionable space. It is going to be difficult. I mean, it is. But the other bit which I must add as a caveat is, we think that what numbers we use in our models are basically normalized numbers. So we don't think about next 12 months, 24 months. We think about normalized numbers over the next 3 to 5 years. When you put those numbers, you will see that value emerges. And when value emerges, you get opportunities.
So when you say anti-consensus, what would fit the bill in the Indian context right now? I mean, are you referring to something like IT, which most people seem to be underweight on, or that's not the kind of sector that you're alluding to?
No, it could be. I mean, it is one of the names. I mean, it is one of the sectors which kind of, it is not fashionable to be there in Indian IT space for multiple reasons. That margins under pressure, and US is constantly threatening to be more patriotic, and policy and tax laws will change. All that is a fair bit of noise. And when the negative news flow rises, the stocks tend to kind of trade at close to zero implied growth, which is the right time to kind of probably going to think about it. There are a few more sectors which is very unfashionable. I mean, it is kind of you can guess what I'm talking about. There are opportunities there where people kind of see last 2 years and say that this is basically a value trap. But when we normalize numbers, you will realize that when it gets back to the trend line, you will see opportunities.
Mm-hmm. What about things which had become fads maybe 6 months back? NBFCs, stocks were trading at 4, 5, 6 times book. They have collapsed since demonetization happened. I mean, from a very lofty valuation level, admittedly, but many of them are down 40%. Do you see any value there, or do you think these business models will now be seriously challenged?
So the banking and financial space is basically a space which is going through enormous amount of change. The premium that we used to pay for franchise, premium we used to pay for licenses, premium we used to pay for the ability to kind of lend, they're all changing. Things are changing. The paradigm is shifting very rapidly. There is no reason to pay multiples of 4 book or 5 book. Things will normalize, and the growth of 40–50% that we've seen in the segment is also going to normalize. When it normalizes, these things will start trading at more sensible valuations. I don't think they're anywhere close to sensible valuations.
Let me ask you another question about 2017, which is, if you think monetary policy or interest rates will play any meaningful role in helping equity returns over the next 4 quarters.
I'm not so sure. The first thing is that whenever I talk to Indian corporates or Indian analysts, and we kind of keep talking about rate cuts and monetary easing, and I think the rate easing cycle is pretty close to done. There is very little room left if one is to benchmark the inflation differential, or even if you take whichever way you want to cut it. The rate easing cycle is pretty close to an end. And if that be the scenario, you're left with only a couple of options. That equity will be the way you end up making money. So there will be equity flows, which will mean that the money will possibly kind of keep the markets flat, and valuations will look stretched. And it is going to be a scenario where till growth comes back or earnings revisions start happening upwards, you will see that any amount of monetary impact is going to kind of not help earnings.
That's an interesting point. I was going to come to that. Is that the scenario that you're leaning towards, that you may not see a major price correction from here, but you may have a prolonged time correction with stock prices being very, very sticky on the way up? Do you see that kind of a phase, 1 to 2 years or 1.5 to 2 years of an extended time correction for this market, which will be frustrating?
I suspect so. I think the next 12 months, as if I were to look at a crystal ball and think about the next 12 months, it is going to be a flattish market. Good news is going to be difficult to digest. Bad news will get digested quickly, and one will have to struggle the troubled waters or wade through troubled waters. Corporates will find it difficult to make money because margins will kind of immediately come under pressure as GST and other anti-corruption measures keep rolling out. And it is going to be a difficult 12 months as I see it till the capex comes in, tax revisions happen. There is more money available in the system for capex to break the ground, and also that translating to earnings is going to be a further prolonged process. So I suspect that it is going to be a bit of a boring 17.
Can government policy change anything around, Krishna? Because there is a hope that having stung the market with this demonetization thing, the government is now looking to salvage something and maybe rekindle animal spirits with its budget or before that. A, do you think it's possible? And B, what is possible or doable which can change sentiment or, more importantly, earnings around?
So this is in two parts. First part is the demonetization, and so whatever, those are jargons and details. The effort is corruption. I mean, the initiative is to remove, eradicate, curb corruption. If that be the initiative, it is not over. It is going to be long drawn. It's a substantial drive. So that will keep carrying on. The counteract is basically tax benefits. So if you're going to curb people from being corrupt, you have to possibly ease tax measures, which is basically cutting tax rates back, which releases consumption. That's part one. Part two is you have to kind of cleanse the system and allow easy business operations. So ease of doing business will have to be kind of first thought through, and that will possibly be the two key initiatives that will be taken up in the next few months as we keep talking. I think my understanding is that the government is completely cognizant of these facts, that first cleansing and clean growth is absolutely imperative.
Do you see politics playing a role in 2017, Krishna? I mean, we've got some big state elections. Does that cause any nervousness or volatility, or does it have the potential of doing that?
Yeah, I mean, see, politics has been discussed by everybody, and everybody's an expert in politics. The fact is that does it matter too much in the overall scenario? UP elections will matter. It is more sentiment drivers. Does that change the game? Does it make the center or the government stronger? Maybe sentimentally, yes. But the center has a mandate which is very strong in any case, and the policies that are being rolled out is reasonably suggestive that they are in control. The peripherals, which are basically state elections, budgets, these are measures. I mean, these are basically sentiment boosters, but do they change earnings? Will they kind of drive the top Indian corporates to put the dollar on the ground? Which we will have to wait and watch. The ease of doing business because of these political changes, will that get impacted? That's what we need to see. So I suspect that there are several things that can happen. First is you'll have tax rate cuts, you'll have ease of doing business, so there will be some measures which will kind of attract FDI. Then you'll have UP elections. Those are positive indicators, but they could be positive sentiment drivers as well.
So how should longer-term investors approach 2017, Krishna? I mean, if I'm asking on behalf of a patient investor who's willing to look beyond the next 4 or 5 quarters. I mean, you understand there is pain, there is disruption, and there will be no growth for the next 4 or 5 quarters. But through this year, if you get big dips in stock prices for whatever reason, is it going to be a year of accumulation in your book, or the case for buying stocks or franchises is not that compelling according to you?
No, no, it is. You see, India is a fantastic market. It gives you opportunities all the time. And 2017 will be a year when there will be enough opportunities because bad news will get digested very, very quickly. And if bad news hits the ground and possibly hits the tape and you get opportunities, you will get opportunities. And I'm very certain that the way the globe is turning out to be, that there will be volatility as always, and that will give really good opportunities in India. And having said that, don't get me wrong. I mean, I want to correct the context here. Is that 17 is going to be a difficult year, is what I'm saying. 18 is possibly, as a follow-through, could possibly, bounce back a bit. But 17 will, as always, as every other year, you will get opportunities, and the opportunities are there to be grabbed. It's for people to kind of hang in there. Our investors have been very, very sticky, and they've been hanging around. They've been making money over the last 3 to 5 years, so they carry on holding. So if there is a period of 1 or 2 years where markets get disrupted, slow down, some of the measures are good measures, and it will emerge as a far cleaner market, and I think there is opportunity there.
Krishna, you have a good 2017. It's a pleasure hearing your thoughts as always. Thank you very much for your time today.
Thank you very much for having me.